Hodges Capital.
Yes, sir.
All right.
Yes.
So let's talk for a minute about Europe. A lot of people, as we mentioned during the break, in this country have some money overseas. So what's the concern now?
Well, the market's saying there's no concern. You saw the market go down a little bit yesterday, and that was kind of the headline, but it was up today, and it rebounded nicely throughout the day today. So the stock market's saying, hey, this is not something we're too concerned about at all. But if you have money overseas, I bet you went to bed last night thinking, should I go get that money out and bring it back to U.S. for, safety reasons? Because who cares about the taxes if they can go and grab your money? You can't sleep good thinking that. So I bet you there's a run on the bank, so to speak, from Americans. That
and Cyprus is a drop in the bucket.
Right.
And we'll see if their parliament gets by with this or if the EU can override that. But the main thing is, you say, how about those other countries, the bigger countries where there's more money? This is a dangerous precedent, isn't it?
Right. It's a dangerous precedent. And the reason the market thought about going down yesterday is it could affect a run on the banks for the euro. And so other nations, if you're a neighboring nation and you see this happen, you're probably going to go get your money out of the bank. It does set a dangerous precedent.
But they said no to it, right?
They said no to it.
Okay, so what happens now? They still need the bailout.
They still need the bailout.
Is it going to be Russia?
Fear runs the headlines. The national press that covers the market, they're looking for headlines and ratings. And so, to me, it's not even an issue for our stock market and our economy. Now, some U.S. banks may have some assets over there that you'd say, might want to avoid that bank. But when you get right down to it, it doesn't affect Apple Computer, it doesn't affect Home Depot, Walmart. And those are the kind of drill downs you need to look at the market and understand that some American companies just simply won't have a glitch when it comes to this topic.
But we have to worry about other countries like Switzerland or some of the other countries that are
if you ask me, you don't, because this is an American economy and the stock market's based on that. But there's always fear, and headlines can move the market on a short-term basis. That's reality. But the euro crisis was in our market last 6 months, and look where it's gone to. It's gone to a high, so it's kind of pushed it off. Said it's not.
So the next two countries really are Spain and Italy. Bigger players, but still
smaller,
not going to affect us so much unless it turns into a public relations panic. And as you say, the market is very emotional. Fortunately, the emotions were held in check this time.
Right, and if we did have a sell-off in relation to this, I'd say you could easily find some opportunities, maybe avoid some financials, some big national financials, but some opportunities in the market, because things have been trending nicely with the market, and we seem to be on the road to a semi-recovery. And if the Dow's at an all-time high, it's not be-all, end-all the Dow, but it does say that people are overall pretty positive and feel confident with their investments. They see their values going up every month, and that's a good feeling, even though they're getting less money in their paychecks because of the payroll tax.
Do you think the instability in Europe that we've seen in Europe and these tax concerns and what's happening with the banks, could that benefit the U.S.? Has it already benefited the U.S. because maybe international companies are looking at moving more assets here away from Europe?
It definitely could. I mean, if I was running a company, if I was CEO of a company and I had cash in another country, I would get together with my board of directors and say, should we get that money here? Because if that government can go in and do that, that's got to be scary. The United States would never allow something like that. So I think it's probably a topic in boardrooms for sure.
Another question we're looking at, there's a story out today that 28% of Americans now, according to one survey, are not confident about saving enough money for retirement. And this, in fact, is the highest level in 23 years. So has this been a long time coming? What do you think will be the implication here?
I think people's heads are spinning when it comes to this topic, because 2008 is so fresh in everybody's minds, and their values went down. And let's say you got out of the market in 2008 with your 401k, you went to cash or you went to bonds. Now you're looking at it and saying, oh, that was a mistake to stay out. Now what do I do? So I think Americans know what they need to do for a good retirement, but they're not doing it. And that's probably their angst. They're saying, I know what I need to do, but I need to start doing it because I'm not doing it.
And people are having to work longer because of that.
Right. I actually think that's a benefit. If you work longer, like you guys were saying earlier, you're mentally sharp, you're physically sharper, that's a good thing. But, I think Americans' heads are spinning, and, because it's a topic that they just can't get their hands around. They're going to work longer, but they still have to save the money, and they know they need to do it.
Is this market going to hold, do you think?
I think it might. The market's never going to go straight up. And you always have times of the year where summer brings in a low volume activity. So gravity pulls the market down somewhat. You're going to have those dips. A 10% correction, in my mind, would not be bad at all. But it does seem like money's coming out of bond funds and going into equities. And that money has to be put to work by the ETFs and by the index funds. They got to buy the index. So you're buying, buying, buying. If interest rates tick up, you're going to have more of that. So as bonds become a little more dangerous, so to speak, for people, not as safe as they were 5 years ago, their other alternative is equities.
I've been encouraged by the fact that over the last few months, the Dow may go up 50, down 50. We're not those days where it goes up 400 or down 400.
It's a
like
steady.
Yesterday, 60 points. Not bad on a day when there's bad news.
It's a steady. And think of this. In the last 2.5, 3 years, we've had a good market. But most pundits would say that Apple Computer was a big percentage of that gain. Since September, Apple Computer's down 40%, but the market's on a new high. So that tells you that more companies are participating in this, and that's healthier for everybody.
Yeah.
How about tax-free munis?
Real quick.
Oh, okay, tax-free munis. Do you think they'll ever make them taxable?
I don't think so, no. No, I don't think so. I think that's a niche that they'll keep that.
Okay.
Clark Hodges, Hodges Capital, thanks again for coming in.
Thanks
We
for having me, guys.
appreciate your
Appreciate it.
perspective.